All right, let's dive into Solid Power, ticker SLDP, and their Q2 2025 earnings call. Now, this was a really interesting one. You had the headline numbers telling one story, but the market told a completely different and much more exciting story.
Okay, so let's start with that report card, and really it was a tale of two very different stories.
So here's the breakdown. You see the earnings per share, or EPS, came in at negative 14 cents. That was fine, exactly what Wall Street had penciled in. But then you look at revenue. The consensus was looking for about $6.5 million. Solid Power came in with $7.5 million. That's not just a beat, that's a pretty significant surprise to the upside. And that right there is where this whole story starts to get really interesting.
And then, boom, this happened. The very next day, the stock just took off. We're talking a surge of over 30% on a huge volume. So the big question is, what on earth did the market see? What was the catalyst that made everyone ignore that just okay earnings number and pile in?
Well, it all comes down to separating the signal from the noise. It turns out investors were smart enough to look right past the noise of the bottom line earnings and zoom in on a very, very strong signal. That signal? Real, tangible progress.
And you could hear that signal loud and clear straight from the CEO, John Van Scher. When he called the BMW partnership a major step, that wasn't just some canned PR line. This was the market getting confirmation that Solid Power's tech isn't just a science project anymore. It's actually getting into real cars. That's a massive, massive validation point.
So let's get specific. The market latched onto two huge operational wins. First, they got their battery cells into a BMW i7 test car. That's proof the technology works in the real world. But just as important, second, they completed factory acceptance testing for the SK-On pilot line over in Korea. And that proves their business model can work. These weren't just bullet points on a slide. They were promises made and promises kept.
And both of those milestones feed directly into their whole game plan, what they call their asset-light thesis. And the idea here is pretty simple and pretty smart. They don't want to be the ones spending billions and billions of dollars to build giant gigafactories. No way. Their goal is to perfect the really tricky, high-margin stuff, the electrolyte, the cell designs, and then license that technology out to partners. What we just saw with BMW and SK-On is the first real sign that this capital-smart strategy might actually pay off.
So, this leads us straight into their game plan, which is all about the electrolyte. The whole business model hinges on them successfully monetizing this key piece of technology.
And here's how they plan to do it. It's a pretty straightforward three-step playbook. Step 1, innovate and sell the electrolyte itself. That's their secret sauce. Step 2, license out the designs for the actual battery cells. And then, the most important part, step 3, let their partners, the SK-Ons of the world, deal with the headache and the huge expense of building the giant factories. It's all about focus. Okay, so looking forward, what's next? Well, there are two big dates you're going to want to circle on your calendar. First up, late 2025. That's the target for final site acceptance with SK-On. That's a huge one. Then, in 2026, they're aiming to get their own continuous electrolyte pilot line up and running. If they can do that, it proves they can actually scale up the very heart of their business.
Now let's talk about the money for a second. Yeah, their operating expenses looked a bit high this quarter. But here's the thing the market understood. A big piece of that spending was a one-time cost, directly tied to getting that SK-On milestone over the finish line. So investors didn't see it as a runaway expense. They saw it as a smart, strategic investment that's already paying dividends by making the whole company less risky. With nearly $280 million in liquidity, they've got the runway to hit their goals.
Okay, that brings us to the final section, our take on what comes next. Now that Q2 is in the books, what are we looking for in the next call?
It's the question on everyone's mind, right? Where does the stock actually go from here? Was that huge 30% jump just a flash in the pan, or is this the beginning of a real, sustained turnaround for the stock?
Well, in our view, the answer depends entirely on their ability to keep executing. Here's what we're watching. That SK-On site acceptance by the end of the year, that's table stakes. They have to hit it. After that, we need to see more wins. We're talking new deals for electrolyte sampling, clear progress on that 2026 pilot line, maybe another demo vehicle with a big OEM, and the holy grail, of course, would be any kind of new licensing or volume contract.
And you really need to see this in context. Look at the broader market for battery and EV stocks. It's been pretty much flat or even down. Meanwhile, Solid Power is up 30–40%.
What does that tell you? This isn't just the whole sector rising together. No, this is about something specific to this company. It's about execution, and the market is finally taking notice and rewarding them for it.
And because of all that, our rating heading into the next call is outperform. Look, they have hit some absolutely critical milestones that make the whole story much, much safer. As long as they keep hitting their deadlines and delivering on their promises, we think the stock has more room to run.
At the end of the day, management's confidence feels earned right now. The CEO says he's optimistic about delivering strong returns, and after the quarter they just had, frankly, why shouldn't he be? They delivered, and they've absolutely earned a little bit of that shareholder optimism.
And just a quick but very important reminder, of course, this is not financial advice. Everything we've discussed today is for informational purposes only. You should always do your own research before making any investment decisions.